Good morning. I'm Joe Brusuela, Senior Economist at Bloomberg LP, here with your Bloomberg Economic Brief Morning Cup of Joe. Okay, so this week we've got a holiday-shortened week. Focuses on policy and news flow out of Washington and Europe. Now, the rapidly approaching fiscal cliff and the variety of European policymaker meetings are likely to dominate pricing action during the upcoming week. Here in the United States, the public negotiations among the two political parties was not particularly encouraging over the past several days, and I believe is partially responsible for the preference among investors for less risky assets, and I expect to see that to continue until there is some signal out of Washington that at least partially the fiscal cliff will be mitigated and perhaps a more comprehensive set of negotiations on a grand bargain that deals with the long-term fiscal path of the United States can be put into place. Now, the big event this week will likely be Chairman of the Federal Reserve Ben Bernanke's speech at the Economic Club of New York. It's at 12:15 p.m. on Tuesday morning. It looks to be a review and reformulation, but rather a retrospective of what the Fed's done or put into place to bolster overall economic activity. Now, given that we do have a FOMC meeting December 12th, and remember those very interesting comments by Janet Yellen within the last 10 days about numerical targets, I do expect Mr. Bernanke to give some sort of a subtle hint at a deeper discussion on the restarting of the Treasury Asset Purchase Program as Operation Twist is phased out and ends, and as the Fed probably wants to get out ahead of any possible negative consequences that might come from a fiscal shock engineered out of Washington. Now, this week in terms of economic data, we have housing data out. That's probably going to be the major event in terms of the reports. This morning in particular, we're going to see existing home sales, and like all of the data that we're going to see here for a while, it's impacted by Hurricane Sandy. You know, sales in the Northeast account for roughly 13% of overall total existing home sales. Now, given the near shutdown of economic activity in New York and New Jersey for several days, as well as the severe impact of the storm across much of the Mid-Atlantic, we should expect to see home sales contract for a second consecutive month. That's in contrast with the Bloomberg consensus, which expects no change in existing home sales. That would be a small miracle given the data that we've seen that's already been impacted by the storm and the severe economic impact and, of course, damage that we got from the storm. I'm Joe Brusuelas. It's been your Bloomberg Economic Brief Morning Cup of Joe.